if we see a real shift and we do start to see inflation moving higher, what we'll likely see, obviously, is number one, no further cuts to interest rates. In fact, you then run the risk of the opposite happening.
Yep.
Central bankers don't particularly like that, where you're in trend one and then it goes in a whipsaw to trend two. They tend to be much more staid and slower moving. That said, within the Federal Reserve, we've got a new chairman that'll be taking the reins, I think, in June of next year, after Chairman Jerome Powell steps down at the end of May.
Sad. He's been a good central bank governor.
Look, I think he has too. His ability to communicate with markets, particularly, I think really it's been good. Peerless. It's been very, very clear, very transparent, and also there's been a little bit of political pressure that he's been under to try and cut rates further, but the economic data points haven't aligned, and he's stuck to his guns. There's also the value, I suppose, everyone talks of Jerome Powell when they think of the Fed, but there is a committee there, and that committee has actually been quite diverse in terms of its view on what needs to happen. We're looking toward the back end of the year, just before Christmas, of the possibility, noting, we're obviously recording before then, of a further rate cut going into the Christmas timeframe. Which probably wasn't expected a month or two ago. So, the committee themselves, they're coming up with views and opinions, and it's not just the chair.